Welcome to DeFi by Design, where we talk all things blockchain and cryptocurrency while striving to educate, empower, and enrich.
What's up, guys? It's your boy Andy. Real quick, just want to tell you about the sponsors that make the DeFi by Design podcast possible. First, we have 𝗲𝗿. 𝗲𝗿 is a non-custodial money market protocol where you can go and leverage your assets and earn interest. So you can go in there and deposit about 10 or 20 assets, ETH, any stablecoins, wrap Bitcoin, a whole bunch, Link, and you can lend them and you can borrow tokens to go long, to go short, to earn interest. Head over to app.𝗷𝗿.com. Check it out. They have V2 is coming soon. Check out 𝗷𝗿. Next, we have DeFi. DeFi is a layer 2 gasless decentralized exchange on Ethereum. They use Starkware to conduct their trades on layer 2. The token 𝗵𝗵𝗶𝗵𝗵 has a liquidity mining scheme ongoing, and they have a bunch of cool stuff coming in. So if you want to trade on L2 in order books, not just swaps, check out DeFi. They're awesome. With that being said, let's get right back to the show. I hope you guys enjoy. And again, check out 𝗷𝗿 at app.𝗷𝗿.com and DeFi at DeFi.com to lend and borrow and trade on L2. Cheers, guys. What's going on, guys? Welcome back after the holidays to the DeFi by Design podcast. 2020 has been a crazy year because we've actually accomplished so many things that we are trying to do in the space of crypto, in DeFi, as young men, as people who want to see the world do better, be better, and enjoy life. We are trying to grow this DeFi ecosystem. Right. And, all these podcasts have leaded up. It's been a good, 6 months now of what we've been doing, and what's been going on in DeFi has been lasting, years now. And now we're at an interesting point where we're having protocols be developed that are algorithmic based. Really little incentives other than algorithmic incentives that create people and create a market, and they create ideas that happen. And we are talking with Ramifi today. Ramifi is a commodity indexed stablecoin, which is based off purchasing power of different assets and commodities. We'll touch way more into that. We are with 𝗂𝗃², and boy, I am out of breath. I'm with Robbie as usual, and two 𝗂s from the Ramifi Protocol. Welcome back, guys. 2020 has been great. What's up, Rob?
What is going on, guys? Super excited to have Ramifi on today. Like Andy said, 2020 was a crazy year, and it didn't slow down towards the end. We had some crazy market action. We had just Bitcoin all-time highs, Ethereum's running up, so prices are looking good, and the community's just building and building and building. I believe this is going to be posted the first podcast of the new year. So we have a new year, we have a new stablecoin up into the market. So I'm super excited to talk to Kyle and Kyle today. And get after Ramifi. Kyle F, how you doing, man? Everything feeling good?
I guess I got a nice New Year's gift with these markets. They're treating me really well. I had a good Christmas, got a lot of nice presents, and then I woke up the next day and things are amazing. I'm having a great time.
Awesome. Kyle K, how you feeling, man?
Great, just over here in Texas. I wish it was a little bit colder, but other than that, the markets are doing great. You got Chainlink up 10%, which is the majority of my holdings, but other than that, I'm doing pretty good.
Awesome. Yeah, so why don't you guys give us a quick elevator pitch, a quick intro into what Ramifi is. How do you guys get started? How did you meet? And what really led you into
3 or 4 months ago,
how it exists
when
today.
might have been Kyle that showed it to me, but I came across 𝗵𝗶𝗴𝗵 supply-based mechanism, and at the time I thought it was genius. You have names in stablecoins, you have USDC, even 𝗍𝗿. I think those are all great stablecoins for their time, but major fallback is the fact that you have to over-collateralize Ethereum with it. So that's not it's a fun thing for now, but it's not really a viable long-term thing. And then you have USDT and USDC, which are backed 1-to-1, at least supposedly. And that's also not an extremely scalable solution. For every dollar you add to the ecosystem, you have to actually acquire another US dollar, whereas it really speaks to the DeFi narrative of people collectively believe this is worth $1, which is what money is, then the ecosystem can grow to trillions of dollars without needing to interact with the legacy fiat system. The only drawback that I saw with 𝗵𝗶𝗴𝗵 was the fact that at the end of the day it was pegged to a dollar. Granted, it's being buffered by a peg to the consumer price index, but still, whenever the US decides to, say, print $4 trillion, on some level, they're also printing a bunch of 𝗵𝗶𝗴𝗵, and our decentralized ecosystem is still tied to that legacy monetary system. So I came up with the idea to, instead of basing it on the dollar, using the dollar as an on-ramp, but scaling it down with the growth of the real world, wood, gold, oil, cotton, beans, whatever. What can our money buy today, and how can we snapshot that purchasing power, in perpetuity? So, in 10 years, when the dollar's worth, 60 cents or whatever from what it is today, the RAM token will still be worth, $1, but at the time it'll probably be, $2.25 or something like that. It's just about from, quantitative easing and moving us towards an actual decentralized unit of transfer between ourselves, being able to enter and exit the market. So that's the idea, that's how it came about, and that's what we're hoping to accomplish.
Awesome. Yeah, so for the folks that just listened to that head spin, which was absolutely just a concept of idea of the dollar and what even a dollar is, and then how can we create a better dollar, is just an insane thought. So for the rest of this conversation, let's continue to kind of keep that concept in our minds. Like, okay, we are almost trying to create a better form of $1 or of a unit of measure of money. And it's crazy to even think about that's even possible. But thank you for that intro, Kyle. That was awesome. I mean, even with the market going up, as we were saying, with our sentiments being boosted, you can even hear it in my voice, in your voice, and what you're thinking. The demand for stablecoins is still so high, which is really interesting. I feel like 2021 is almost the year of stablecoins.
For us to be able to effectively speculate in these markets, we need to obviously have really good on and off ramps, and you have pretty much every government agency in the world trying to regulate this to death, and the more that we cater to that legacy system, the more we lose the purpose of crypto. Like, trying to fit things in the old box, it won't work, and we would just end right back up to where we started.
Gotcha. And I'm really curious how you determined which commodities are fitting into this aggregate index that Ramifi is going to be based on. Why did you choose some commodities rather than others? And what was the determination for commodities at all? I know, at kind of a rudimentary level, the dollar, we have quantitative easing and other contractions where it is a centrally determined, function that's controlling the supply and the demand. But generally, it's based off a general sentiment of the economy and how stocks are moving. What was your philosophy of going to commodities, and then even more specifically, why certain commodities rather than others?
So that was actually a pretty easy one. It's strictly based on volume. So the bigger commodity is, like crude oil, even down to like cows, 100 biggest commodity markets that exist today that people trade globally. Currently there's no mechanism to, switch commodities in and out if volume goes up or down on a certain market. One's like, 99th, and then the next day it's like 110th. The top 100 commodities we have today, sorted by volume, that's what we decided to use for our peg, because that's the most indicative of what money today can buy. And obviously, same with like smaller cap cryptos. When you get to like, the bottom 150 or whatever, you have extreme volatility that doesn't necessarily reflect what's going on in the global economy. It's more just, speculators making big purchases that day or something like that. Whereas moving like the crude oil market 1% by yourself is, like impossible. So yeah, just sorting by volume. That's it. And that's how we picked our commodities.
Oil, gold, and silver, and then we got food. What are other big high money commodity sectors? What am I missing? I'm missing a bunch.
You have, there's a ton. You have corn, which is like in literally everything. You try to find a food that doesn't contain corn, and it's like impossible. Even like steak, somehow corn's found its way in there. But you have like coffee beans. That's a pretty big market. You have cows. All the precious metals, obviously. Gold, copper, silver, aluminum, platinum. Those are all pretty big markets. The energy sector is huge. Obviously, crude dominates that. But yeah, it's a huge list. I haven't committed it to memory, but
I'm thinking about like the idea for how to make this narrative work, right? This idea of using commodity purchasing power to function as what the value of like one purchasing dollar can do. And I'm just thinking about like, okay, like how can that be spread? And I'm thinking like it's kind of a narrative that is kind of easy to understand for people. Like I'm sure the both of y'all have had explanations, and it's not something that's like way out of the picture in terms of like, okay, it's based off the purchasing power of certain commodities, right? And so, I mean, I'm sure you guys have been able to explain it well. But what I'm curious about is on the side from taking it from, okay, so this is our philosophy. That's kind of what Rob asked. I'm sure Rob is curious here as well. Like, what makes this work? So what makes the ability for this data of the commodities and their markets out there with the blockchain and the Ramifi token model that makes it work? So what is the rebases? Is there coupons? I'm sure we can read all about it in the white paper, but for those who are curious about like the mechanisms, would love to hear about it.
Yeah, I can answer that. So you're basically asking tokenomics in relation to these commodities, correct?
Yeah, like so like what is your what is your mechanism, kind of like why? Like, why, like how did you come from, okay, this is our philosophy, which Rob kind of just like asked, and that's just got me going crazy now. So now it's like, okay, how did you go from that to actual thing type of, yeah.
If you look at the consumer price index, which is what 𝗵𝗶𝗴𝗵 is pegged to, I don't mean to name drop, but there is some issues related to the CPI that are a beast of its own. I mean, you can talk about all the problems the CPI has and why like regulators use it to measure the dollar instead of some other arbitrary like measure. But the measure that we're coming up with, we amalgamate 100 commodities. It can go from, as you mentioned, gold all the way down to potassium chloride, because you also have markets in relation to chemicals, wood, clothing, you name it. You take this entire basket, $1 buys this much of gold, $1 buys this much of cotton, this much of rubber, and so on. And that peg is denominated in $1, and what the dollar can buy is going to be given as a snapshot upon launch. So the contract is going to read, hey, okay, January 4th, 2021, a dollar can buy this much of gold, this much of rubber, and this much of steel. And over time, every week, the commodity prices is going to be reset, just like the rebases, but the rebases are done on a 24-hour basis, as most algorithmic stablecoins do. But the commodity peg is going to be reset every week. So every week, the dollar is going to be slowly, well, hopefully it doesn't get too inflated based on our numbers, but every week, the dollar is going to be slowly being dynamically weighted to these commodities over time. And from a year from now, who knows where that peg is going to end up. But that will essentially tell you, okay, 1 year from our snapshot, which was January 4th, this is how much a dollar can buy now after, 52 resets. So like 52 times.
Understood. Yeah. And it's probably going to go down in purchasing power. I mean, that would be the thesis. Okay, so this is going to happen. So now that we understand that, and that's how it's set, it's probably going to lose value in terms of how much purchasing power it has, unless the trend changes, which it's obviously possible. And it's kind of weird to be even saying that and addressing a like US dollar as like it's going to go down in value, like it's losing value. It's kind of crazy to even think about. But anyways, aside from that, yeah, ideally it's going to be going down. So I didn't mean to interrupt. I just wanted to make sure that, we're on the same page with how you're thinking.
That's definitely right, because so let's say the dollar of January 4th buys, of course, this certain amount, but then a year later, January 4th, 2022, after multiple resets, the peg might be a lot different. It might be even $1.15, because the CPI, which tracks consumer inflation, is going to say, hey, the dollar only devaluated by 3 to 4%, even though they printed 24% of the US dollar supply this year. So I don't think those things are very correlated to how people view like money in real time on a global scale. Like the CPI is just focusing on what Americans can do with their dollar and what some people around the world can do with the dollar, but it doesn't address the raw materials that all these consumers use in the background, if that makes sense.
Yeah, so it's really a different measure of inflation, whether you're using the consumer price index, the CPI, or a commodity index. And it seems like the CPI is really underestimating inflation, if I'm hearing you right.
Yes.
Is there reasons for that? Like,
we published an article on that. It pretty much details as just to why the CPI is wrong. There's certain divergence. There's a divergence in price of certain prices of goods since the 80s. And that's when we think the CPI started to sort of divert from what the dollar is actually doing versus what regulators are trying to say, hey, you know what? The dollar's doing great, let's print more.
I've seen a Twitter account and also a bunch of articles that I've read through, and they're all titled, "What the fuck happened in 1972?" If you've seen that Twitter account or those articles, and it kind of shows some pretty interesting graphs that reveal like the separation between, I believe it was income in like the median family income in the U.S. and how it was on par with generally how inflation was going. People were making more as things became more expensive. That's kind of like the balance that you want to see if, you're going to be able to afford things. But then something happened in 72 or the mid 70s where the median income of individuals and families started to either go down or just didn't increase quite as rapidly as things became more expensive. So, I'm not sure exactly what the differentiator there was. It sounds like it could be a measure of how we were tracking inflation, or if it was the gold standard. I'm not sure when we came off that. But yeah, if you could take it from the economic perspective there.
I'm fairly, so with the consumer price index, it's easy for the U.S. to hide the fact that goods are constantly getting cheaper because, we're getting more efficient every day at making everything. So if, someone comes up with a new method for, milking cows or something, increases efficiency by 25%, that's basically free game to print 25% more money and fill it in and say, oh, look, milk costs. As far as what happened in the 1970s, it's probably, it's obviously just a theory, but it's most likely due to the propagation of the petrodollar. So once the U.S. made its deal with the Middle East to only export oil paired with the U.S. dollar, it forced every other country in the world to interact with the U.S. dollar, and so thereby creating the dollar as like the world standard currency. And so it was an extremely clever move on our part, because now if we print $4 trillion, what we're able to do is essentially just steal the labor of every other nation on earth. Because they're forced to, if they want oil anyway, they're forced to go through our dollar to get to the end game. So that happened in the 70s, and since then the U.S. has had free reign to just print as much money as it wanted, and every other country kind of had to foot the bill and absorb our debt. So, it's a genius. It really speaks to the nature of like money, what it is, how it works. We left the gold standard back in the 30s, so I don't think that had anything to do with it. But I mean, since the 1920s, just starting this project, I was looking through the math on, the amount of dollars in existence versus the amount of people in existence, not in America, but just across the globe since everyone uses it. And just going by that metric, the dollar has outpaced, human birth rates across the globe to the tune of about 96,000%. So that's just raw inflation and devaluation of the US dollar. You can't possibly reconcile the two. It's supply and demand. There's more dollars being created than there are people. The value goes down. So that's why the CPI is inaccurate. Things should be a lot cheaper than they are today, but instead they've gotten more expensive. And the ability for us to take the labor of other countries is something that started about 50 years ago.
Yeah, there's a current theme for sure, like with basically that kind of backing, I suppose, that idea, that concept, and that history that you've just shared has caused people to create a narrative in their own minds and also share it that America is losing power in the global trade world. There's talks of China, there's talks of other big nations, EU. Like it's quite an interesting realignment of ideas right now that's happening. In 2020 kind of just spiked it off, not only in terms of money printing, but in social and cultural changes and psychological adaptation. So crazy concept, but I wanted to kind of shift, if it's cool. We can come back to the economic aspect for sure here in a second. Actually, it'll tie into this, but I'm here because I want to make some money. So for all of you who are listening, y'all just listened to an absolute great idea of what the US dollar has been, what we're trying to achieve here with stablecoins, how it can happen through algorithmic pegs and rebases and whatnot. But how do the early people in the beginning, how do they make money? And it's DeFi, it's transparent. So I honestly fully expect you to tell us your strategy for making profits using the Ramifi token in the early stages. If you can't disclose everything, that's totally fine. And maybe this is an abrasive question, but the way I see it is it's fully open, it's fully transparent. And if you were a participant in the network in the early month, 2 months, how would you feel that you would want to, be an actor of profit in the system?
So I guess the easiest way to tackle that, like overall strategy, is just it's ubiquity. The more trading pairs that the more we can get people to use RAM as a trading pair against whatever. It could be Bitcoin, ETH, Chainlink. The more trading pairs we have, the more ubiquitous RAM is. The bigger of an off and on ramp it is. Locking in your gains, or entering crypto, whatever. That's our niche. We want to be the asset people feel safe in during tumultuous times in the markets. So long-term strategy, ubiquity. How do we get there? And that's by getting onto as many exchanges as possible, getting partnerships, things like that. Short-term or maybe mid-term. Obviously, liquidity is extremely important. So we're going to be participating in liquidity mining programs. We haven't set the rates yet, but it's just that point at which we are on-ramping users of our protocol at a faster rate than we're paying out for users to provide liquidity. I imagine it would be similar to any of these other liquidity mining programs. Looking at like at least double-digit percentages a year for providing liquidity, and has the added benefit of not having any kind of risks associated with impermanent loss, which is when you're providing liquidity for an asset. If one asset goes down, the other one goes up, and you're losing out on gains of one asset. Since we're a stable currency, the impermanent loss will be zero, because it's like pairing DAI and ETH, right? It's you have a dollar, you have ETH. Doesn't matter which is which. They're both still where they were at. So we're not going to have impermanent loss, which is nice.
Yeah, real quick, it's like ESD and USDC pairs get a bunch of traction. They have huge liquidity. That stablecoin protocol just boomed off. And yeah, their LPs get paid because they're doing a service of providing their liquidity, taking that opportunity cost, but they're also getting paid for it, and there's no opportunity cost. So again, I just wanted to kind of make that clear. It's kind of like a similar concept to ESD or even DSD. They have really complicated mechanisms, but it's interesting to see how that idea of liquidity provision with stablecoins it's ideal for both parties, if you will, because sometimes AMMs being an LP sucks. If you have two volatile assets, it can suck. So that's definitely super important. But real quick, so actually no, just keep going. I totally interrupted. You're speaking on the short term, how being an LP was going to help you get all your liquidity, in the medium term was exchanges, et cetera.
Yeah. So we have a private sale going in now till the 31st, which there are some discounts built in depending on the lock-in rate. I think the longest one is 6 months because, again, liquidity is the name of the game and when it comes to stablecoins. But beyond that, we're going to start our injection offering, which is just a unique way of introducing the token to the market via Uniswap. And beyond that, it's going to be liquidity mining and ubiquity. Those are the two ways we plan on growing our ecosystem.
And it sounds like, yeah, go ahead.
I think, Andy, you were also asking in the sense of how do I make money as a buyer or as a...
Yes, like I'm trying to get into your game and make money out of your game, and that answered it for sure. Like it definitely helped, but like I know on DSD, like which I have, it's been fun. It's been a good little experiment, honestly. Like you're up and then you're down and then you're up. It's just like it's a mind whirl. But basically, there's strategies, right? So when the expansionary phase hits, you want to bond your DSD tokens, right? Then you get hit with a rebase every 2 hours. Boom, boom, boom. The price goes back under one. Now you got to unbond or buy a coupon or stay bonded. So there's all these different strategies. And basically, what I'm trying to say is, I'm curious as to an early buyer, what would you do? Because I feel like, if you don't want to share it and it's a strategy that you want to have, it's fine. But I'm definitely curious as to what you would say as a participant. I know I'm rambling, but.
Yeah, no, I mean, our torrent, which is what we're calling our liquidity lockups, is another great way for people to compound their returns. But to put it simply, these algorithmic stablecoins, I think for the most part, the people who see gains gains in the sense of, like, I'm not participating in liquidity mining, I'm not participating in anything else but just holding the token. That only results in a profitable trade just because you got in at early. So our initial market cap is set to be about $630,000. But as our network grows through rebases, people buying the token, people locking up their liquidity tokens on Uniswap and mining the liquidity, then that's just a different crowd separated from those who just want to hold it. But as the network grows, of course, the market cap is going to grow. So if you put $1,000 in at 600,000, our initial market cap, and our market cap goes up to, 3 million, that
it'll rebase a lot, and you don't have to say all the numbers because this is a decentralized stablecoin that it's being deployed, so but okay, so I appreciate that's kind of it, right? So the positive rebases, they hit and you make some sort of return, but there's risks, obviously, right?
You own a piece of the market cap. So as the market cap grows and you stay in it, then of course you're going to own a larger portion of it. But there is risks, of course.
All right. And is it more of a minting mechanism or a burning mechanism? I know Andy's talking about the positive rebases. So, if essentially what the Ramifi is tracking is like an inverse dollar, right? Because inflation is going to go up, commodities are going to become more expensive, Ramifi is going to go up in price. So when Ramifi goes up in price, is it a matter of, taking away tokens that people have, or is there positive rebases? That kind of gets back to the mechanisms that were at play that we were talking about a little bit earlier.
So the actual increase in price of the token due to the devaluation of the dollar is not that's not really where gains will be made. With these algorithmic stablecoins, it's kind of an inverted way of thinking about investing, in that the price of what you hold will stay the same, but the quantity of what you hold will either increase or decrease. So you're investing in RAM, which is $1, but maybe next week, even if it's still $1, instead of 1 RAM, you have 2. And there's no leaning by way of minting or burning. It's simply, if the price is too high, tokens are minted to drive the price down, and if the price is too low, tokens are burned to drive the price back up, constantly searching for that peg, whatever it is at the time. And it's so if you would you look on CoinMarketCap or something at your holdings, you'd be like, oh man, RAM's only up 2% or something. But in actuality, if you look at your wallet, it could be an entirely different story, because you could have 3 times more RAM than you purchased originally. And so it's a completely different way of looking at these markets, and they aren't sure how you can expect to make money with a stable currency. And as far as the rebases go, like we've I have seen a lot of attraction towards faster rebases, but there's a fine line you have to toe there. Rebases too frequently will decrease the volatility, which is what attracts speculators. But if your rebases are too far apart, then you are unable to be successful at being a stable currency. So
yeah, you're so right, Kyle. Real quick, I was playing around pot finance like 2 months ago. Stupidest token ever, bro. But it rebased every 30 minutes. I was like, yo, this is sick. I was gonna get rebase after rebase after rebase. Dude, that thing just dropped like a rock. Like you'd LP it, get smashed with IL, get so much more tokens, but they're just worth nothing. They're just like But like on DSD, it went up, from 75 mil cap to 300 mil in like 4 days, and freaking 3.5x in like 4 days. I was like, whoa, what just happened? And price went up too to like $3, which is just absurd. Anyways, what I'm trying to say is, yeah, it's definitely different, and like, wow, it's all hyped to make all this money and stuff. But the point is, you guys are trying to solve like a real stablecoin, I guess, problem. It's a situation that could be changed, and yeah, it's dope.
I guess what might clear things up is it's kind of a misconception to even call Ramifi a stablecoin, right? Because ideally the price is going to go up as commodities become more expensive relative to the dollar. Yeah, there's going to be positive.
The market cap's going to go up.
Well, the price like the market cap is going to go up as well, isn't it?
Well, there's got to be some sort. I didn't mean to interrupt you. I feel like I've been interrupted. I'm just going right now. I feel like there's got to be an incentive for people to sell above $1, right? Or is it not supposed to be a dollar coin? It's not supposed to be a stable coin, or is it supposed to?
So I do think it is fair to call it a stable coin. The price is going up, but it's at a fairly slow rate when it comes to markets. You're talking about approximately 3% a year, like guaranteed. That's just how much quantitative easing is, but no more than like 5 to 6% a year. It's an extremely.
The price is going to start at $1, right?
Yeah.
I didn't mean to interrupt you again, but it's going to start at $1, and the buyers are going to buy it up or something, but the sellers are going to sell it. And so, Robbie, you're thinking the price is going to go up above $1, right?
Exactly, because the Ramifi token is going to track this commodity index, right? So on launch, I think they mentioned January 4th is when you plan on launching. There's going to be a snapshot, and $1 can buy you this much of these 100 commodities split up. So over the next year, call it until January 4th, 2022, like Kyle said, there's an estimated 2.5% inflation on the US dollar. So over that year, you're going to be able to buy 2.5% less of this commodity index. Now, Ramifi is still going to buy you the same amount of that commodity index. So it's going to be worth about 2.5% more than $1 that it started at. And that to me was enough of a offer, enough of an attractive differentiator to make it an appealing stablecoin. But then there's also rebasing and minting and burning mechanisms that Kyle, you were explaining.
Yeah, and to take profits into something that is theoretically growing at a more stable or higher rate than the inflationary value of the US dollar puts US dollar pegged stablecoins at a lower level in terms of investor appeal instantly. So it's crazy.
Just straightforward, like I treat Bitcoin as cash. And I know that's kind of not the best thing to say in like a everyday normie kind of sense, because it is extremely volatile. That guy 𝗵𝗶𝗶𝗵 will come at my ass like, no, it's too volatile, can't be a currency. Same thing, Peter Schiff will say the same thing. But like, if you want to have a bullish narrative on a certain coin and you're not too worried about the volatility, you're going to denominate your investment portfolio in Bitcoin so that you can continue. I mean, that's what like people that make money in crypto, they want to stack sats, right? And then it is a matter of time and it's a matter of timing when you want to exit that Bitcoin market if you see a downturn coming. But, from some of the more profitable people I've seen in the space, Three Arrows Capital comes to mind immediately. They track their portfolios in Bitcoin. And to me, it's almost a version of Ramifi because you're getting away from the inflationary metric of the US dollar, which is normally treated as cash.
Yeah, that perspective switch of denominating your wealth in USD versus Bitcoin versus ETH versus RAM or USDT or like even other like that's just crazy. That's just like yeah. I mean, Rob, you go ahead.
To me, it's always a matter of beating the risk-free rate. And, traditionally it's like the 10-year treasury bond is the risk-free rate. So if you can beat 2% a year, you made money and you did good. But now, like, it depends what you want to treat as the risk-free rate. Ramifi gets you 2.5%, 3%. So like that is a better risk-free rate. If you can deal with a little bit more risk, you can treat Bitcoin as your risk-free rate and still make, a good amount of money, but you have to be aware that it's not completely risk-free. And to me, that's what I treat as cash, is whatever that rate is that I'm comfortable with the risk.
Nice. So y'all too, feel free to have a closing thought on that.
Yeah. In the search for getting the rest of the world to deal in crypto, because I also have no problem holding, Bitcoin, Ethereum, any of the big caps, but I have an extremely high risk tolerance. But if you want like small mom and pop shops or, banks or people paying your mortgage or whatever to accept a crypto, the amount of like acceptable volatility is basically zero. And so that's why I said that RAM is searching for, ubiquity. We want to be used everywhere. And the only way to achieve that is by being able to confidently onboard users with the knowledge that their holdings are going to be extremely stable. In the early days, sure, we're trying to attract volatility. We're trying to have a volatile market because we know no one is using us in the early days as a, dollar. They're using it as a speculative investment. But hopefully in the next, year or two, it does start to become an actual on or off ramp into the crypto world. And at which point you can start to confidently onboard users outside of the crypto space with this stable asset, because regardless of what they think or believe, it's still worth $1 because the math makes it so. And that's the game plan, and that's how we're trying. That's the niche we're trying to fill. It's trying to be that safe, just on-off ramp mechanism, at least in the later days of the protocol.
Yeah, and I like what you said about it initially being a speculative asset, which I mean, there's a lot of parallels between Ramifi and what it's going to be, and kind of how Bitcoin has evolved. I think Bitcoin's timeline is a little bit broader than Ramifi's, but the sentiment still remains. Like, people treat it as a speculative asset at this point because it is very volatile. But over time, if people use it more as a currency, there's more ubiquity. In the case of Ramifi, there's more trading pairs, and it's treated more like a currency. Then it becomes an on and off ramp. And people are able to use it more as a currency rather than a speculative asset.
And that's happening for Bitcoin on like a massive scale of decades, but it should be able to happen for stablecoins and for Ramifi a lot quicker, because obviously the token metrics are much different, right? Like the way that it's, I mean, unless I'm mistaken there, if I'm on the same page as you, right, I feel like, yeah, like eventually Bitcoin will be less volatile and, more is used as just like, a store of value, so kind of, I don't know.
The analogy is like, it's a speculative asset right now. Bitcoin's been a speculative asset for the last 10 years because you don't earn your paycheck in Bitcoin. You don't spend Bitcoin at coffee shop, buying groceries, whatever. Once that's available, it's almost like, if you can spend your Bitcoin at Walmart or Publix, that's almost like another trading pair in the sense that Ramifi is searching for different trading pairs. So once you get the ability to transact, and I can buy cereal with Bitcoin.
McDonald's,
or I
with
can
Ramifi
buy
or the stablecoin or something, right?
exactly. Then there's way more ubiquity, as Kyle was saying, and it's treated more like a currency rather than a speculative asset. Volatility goes down. So I do see the time scale as just kind of like a dilation with Bitcoin when it comes to Ramifi and the differences there.
Have y'all been audited like once, twice, or like how's that going? How's the code? How's y'all's like tech team, or is it you two? Like how's that been?
It's just the two of us for now. As far as the tech goes, it's just me. But I have our first audit is going to be complete by the 2nd. Hopefully, once we take in some more fundings, I want to get at least two more major audits. But a lot of the code coming out of the Zeppelin library, so it's pretty secure. There's very few like unique lines we had to put in to make this happen.
Yeah, it seems like really just the API data pulling from the commodity indexes, like the uniqueness of the project. I feel compelled to ask the question, are you guys worried about regulation in terms of securities law at all? I mean, after what we've seen with Ripple, it seems like the SEC could start encroaching on certain protocols. Obviously, in something very decentralized, it's difficult to do that, but offering, this thing that's supposed to only go up based on these commodities increasing in price relative to the dollar. Are you guys worried about the regulation at all?
Well, we actually, and keep in mind, it's not that the price is going up, it's just that the price isn't really changing or going down. So that's not really like the attractive part, but we do fall into, there's a unique niche here in that the price of these assets isn't expected to really go up so much as the supply is expected to increase, which securities law is extremely unclear about. So we do have legal counsel on board, and they're a little intrepid, but as far as things are going currently, the only major concern they have is that we create a governance mechanism. So as long as our team isn't the one setting the rates for the rebases, and we implement a governance model, we are actually in a pretty good spot.
Better than most companies in the Fortune 500, actually. Crazy to think about. We're breaking the securities laws, but like it's more community based and broad owned than most companies. It's kind of crazy, but we'll leave that one for another day. I think we're about out of time here. You go ahead, Rob.
Yeah. Well, I was just gonna kind of am just thinking out loud here. Is that really what Ripple's downfall was? That they didn't offer voting interests to their community? Like that would have essentially saved them in terms of being a security?
No, they I forget the Howey test off the top of my head, but it's essentially
promise people money or promise people gains is one of them. What's the other one? I know you know it. Come on, man. You definitely know that.
I haven't had to recite the Howey test in like 3 years, but
it's promise people funds. You take cash for it, I think, is probably one of them. Maybe. Or promising profits. Or expecting profits.
In exchange for shares in the company. So that means that they own part of the company because they gave you money.
Yeah. In addition to that, I'm sure Ripple has done a bunch of bullshit as well, to be honest with you. But hey, if you hold Ripple and you listen to this, if you feel like you want to hold it, I can't tell you what to do, man. You do you. It might go up, it might go down, as per usual. None of this stuff is advice. We're talking about the prices going up of stablecoins and the rebase is just while Kyle's finding the Howey test, which I'm still curious about. Just understand that this is all speculative risk, so understand that. Anyways, back to Kyle.
Okay, so we've got the Howey test here is if it's an investment of money, there's an expectation of profits from the investment. The investment of money is in a common enterprise, and any profits come from the efforts of a promoter or third party. And so, as I was saying, there's an interesting thing here in that there's not an expectation of profits because we're manipulating the supply side of the investment rather than the investment itself actually gaining money. Obviously, this is a little tongue-in-cheek thing, but
and tokens aren't shares.
Yeah.
And
it seems like there's not a centralized third party that is making the controls either. So
yeah, and it's important that y'all have marketing. Like, we're doing this because it helps y'all grow. It's marketing, but like, again, it's not like we're closing people on the phone to buy tokens, and that we're like doing aggressive third party marketing to get things out there. You know, like, yeah, we're sharing information, but it's it's definitely. I mean, I'm sure, like I said, I'm sure Ripple was doing some shady shit. To be honest, like, I'm sure they weren't just an exchange and a token on exchange. Like, we'll stop the name dropping, but like, yeah, the Ripple, I think they're like the Rangers or the Marines or something. Man, they'll come after you. They will.
No, I was gonna say, it's just what we're creating here. Not us specifically, but everyone in this ecosystem is, you know, whether people are aware of it or not, we are trying to get away from the legacy financial institutions that exist currently, and that is something that those institutions are not going to like. And so, whether we do it up front or somebody does it through a decentralized DNS with fake names, somebody's going to do it because, you know, these laws are ridiculous. And you know, we'll see what happens with this era of investment, how the SEC treats the DeFi space and all the things we're doing. But yeah, we're gonna push forward either way.
And I mean, it's refreshing to talk to a project and a team that like has that mindset. We talk to a lot of teams that are like, yeah, we want to work with the regulators, we want to really fit into the traditional finance and everyone play nice together. But I don't know, crypto was born from like the revolutionary this is the better way, this is going to overtake the legacy system. So I find it refreshing to see that mindset still exists.
Yeah, for sure. We don't want to go to jail or anything, but I mean, it's good to keep that sort of strong edge.
I mean, you look at all these projects that raise billions and then they paid like a $2 million fine. Like, it's not.
I was like, yo, why? Like, yo, don't find me, bro. Just print it, and then we'll call it even. Done. Oh man, yeah. Well, I mean, is there anything else that you guys can think of that we completely just like might have went over our heads or we missed? Like, it's important on your minds, whether it's on like the marketing side or the protocol side, like anything that is like key that we probably don't understand or haven't talked about. Roadmap, launch dates, information, websites. I mean, we'll post all this information on like in the Twitter and whatnot in the article, but
yeah, we're still working on a roadmap. We're probably gonna have that out by this week, as well as a governance model. We might be hosting our open sale. So we're going to be doing our open sale through both Uniswap and maybe Polkastarter. I don't know if you guys have heard of Polkastarter.
Still, people are hyping it up big time.
Yeah, they've been reaching out to us for a couple of weeks, but yeah, I just got back to them because we were super busy. But we're going to really look forward to like work with them within the next 2 weeks and hopefully do our public launch with them. The other
real quick, I don't mean to interrupt. That keeps it as an ERC20 token, right? It doesn't go in the Polkadot blockchain because it's like kind of like paired chain type thing.
Yeah, I think it's just the fundraising part. And they'll have their own
DEX.
Yeah, our contract address would be up there. Everything would be there.
Yeah, cool. Just want to make sure because I wasn't concerned if Polkadot has their own chain with Polkastarter. I got to do more research, but yeah. So that is a good roadmap with a launch. I mean that like. Screw the ICOs, screw everything else. It's 2020 or 2021, so nice. Is there anything else? I just interrupted, but
no, not really. I mean, yeah, definitely the biggest issue, and that's something I feel like we should really get out there, is we're trying to like help Chainlink integrate commodities into their DeFi feeds. We've had like some conversations with them regarding that. But that's probably going to be our biggest challenge because of how expensive it is to put one feed up on there.
Yeah, and you guys are trying to decentralize your API data, get it from as many different sources as possible.
Correct, but just today the infrastructure is not there. So we're starting from we're bootstrapping a centralized API feed at the get-go, but the goal is to not have any of our feeds centralized whatsoever. But like at today's with what we have today, getting 100 commodities onto Chainlink would be millions of dollars. So it's just not feasible.
It's nuts. And there's definitely a few other oracles, but yeah, that's the trusted, that's like the go-to, which the Chainlink, everything is just crazy. The community, how it grows, or I mean, their product. Yeah, it's interesting stuff. But yeah, well, I mean, I'm out of questions, Rob. I mean, this has just been fantastic.
Yeah, this is super. I guess to wrap it up, since we are just about out of time, this is usually what Andy asks when we hit our rapid fire round, but I'll go ahead and ask it. If you guys had to pitch Ramifi to one person in the traditional finance space, or just a celebrity or anyone that would be interested, who would you guys want to pitch Ramifi to? Who would you want voicing support for your platform?
I feel like Elon Musk could get behind it. I'd be like, hey man, we're having our fucking money stolen every single year. Let's stop doing that.
Yeah.
Let's get away from inflation and stop allowing these regulators to just print their way into my pockets.
Yeah.
He seems like the kind of person that would, at least.
Yeah, exactly.
Hey, he's CEO of Dogecoin, or at least he was.
Yeah,
so.
the pitch would be the money of Mars, bro. Like, so easy, bro.
Yeah. What can you buy? The commodities on Mars.
Done. Done. Like, let's go, baby. Sign me up.
Hell yeah. Well, yeah, this was awesome. This was a super fun podcast. And
Kyle, okay, come on, hold on. Kyle, you got to say who you pitch it to.
All right, Kyle.
Come on.
All right, Kyle.
Me, who I would say, man, there's so many people in the space and outside of the space.
You're gonna say someone from Chainlink, it.
Freaking
Chainlink fanboy, bro.
Sergey Nazarov. Yeah, I would definitely love to talk to him about the project. That would be like a huge accomplishment for the team, honestly.
Yeah, as a biz dev guy, that is it. Like that would be a huge milestone. Dude, that's easy. Write it down. Manifest that shit in 2021. I guarantee it happens. Like, dead ass. After this podcast, write it in a journal, look at it. Your coder buddy over here might think it's mumbo jumbo garbage, but manifest that shit, baby, and I'm telling you, it'll come. No, I'm kidding. But yeah, that was absolutely awesome, guys. Like, I feel like you did a great job of explaining what your perspectives were, all sorts of things about what's coming up with Ramifi. Honestly, like, I really enjoy these podcasts because we meet cool folks. It's something new. I'm fully in the moment, and I feel like I just learned a lot. I feel like my perspective has grown, and I really appreciate you guys being able to come on, us making time. Yeah,
had a great time. There's a lot of good energy here.
Cool, guys.
Yeah, Happy New Year, by the way, since it's...
Yeah, Happy New Year's. Looking forward to it.
That's right. This will be posted in the new year, and first one. It was great.
Thank you, guys. Thank you very much, by the way.
Thanks for coming on.
Yeah.
All right.
Peace.
Thanks for listening to the DeFi by Design podcast. Until next time, DeFi Slate Team.